Yeah, so around the halving, I mean, if I had to guess, I think something in the 40 to 50,000 range is probably like a reasonable sort of thing. I mean, I'm just saying that just historically, what we've seen around the halving, we've sort of seen like a bit of a rise into the halving, then a bit of a dump after the halving, and then maybe 6 to 12 months after the halving, that's when the real kind of crazy bull run happens. And then that you might get like a 10x or a 20x in the Bitcoin price at that point. So yeah, I mean, we're about 27,000 today. I could see sort of kicking around in this range for a little while and then a slow rise into the halving, then a bit of a drop after the halving as some miners go busto, unfortunately, and then those coins will be sold at that point. So that will cause a bit of a dip. And then probably end of 2024, early 2025 is when we'd sort of start to see the really big, violent moves up, is my guess.
Let's talk about those violent moves up. What do you mean by that?
So, I mean, if I had to guess, I think let's say in 2025 or maybe 2026, it's quite possible, in my view, that Bitcoin comes close to the range of gold. And that would imply a price in the 500 to 600,000 range. Now, as is tradition in this industry, we'll probably hit that as a blow off top and then drop another 80%.
500,000 Bitcoin per Bitcoin?
I think it could happen in 2025.
Bitcoin will hit $40,000 to $50,000 by the Bitcoin halving in April 2024 before surging to $500,000 by the end of 2025. At least that's a prediction out from Stephan Livera. There's just one caveat. He then predicts, as we have always seen, Bitcoin will go on to crash 80%. For those who don't know Stephan Livera, he's the head of education at Swan Bitcoin. In his latest interview, he breaks down why he foresees Bitcoin heading to $500,000 before going on to fall 80% back to $100,000. Make sure to stick around to the end of the video where Stephan explains why cold storage is getting more popular and why it's so crucial as Bitcoin gets more widely adopted. Also, only a small percentage of my viewers are actually subscribed. If you enjoy finance content, consider subscribing or liking the video. It's free and you can always change your mind.
I think it's quite reasonable when you really think about how many new people can come in this wave. But I also see it like, because human nature, people will sort of over lever, that'll be sort of the blow off top. And then, as I said, as is tradition in this industry, we'll probably drop 75 or 80% after that. So, it might go to 500 and then crash to 100. And the psychology of it will then feel weird because, Bitcoiners will feel sort of poor, even the price at 100,000, even though that's, almost 4x or more than 4x. The industry is going to really, I think... So there's the world we want to see and the world that I think is likely, right? So I think the world that I think is likely is there's going to be a lot of new money coming into Bitcoin, right? Because obviously that's going to open a lot of the floodgates per se. Now that also carries risks too. But on the regulatory front, I think because there will now be so many more people who are investing in Bitcoin through that spot ETF, let's say, BlackRock or whoever gets it first, and that will in turn spur a lot more conversation amongst the legislators in that class of people. And that, I think, in turn will sort of drive a lot more conversation around how should Bitcoin be custodied and how should services be done on this. So while I advocate for less regulation in terms of what should happen, what I think is likely to happen is sadly more regulation.
But that would provide clarity, and that's what big institutions are looking for.
Yeah, so they will see that as, okay, the government has blessed it now. Okay, it's okay to buy some Bitcoin now. And so I think that will be a likely outcome, let's say early.
Is that a catalyst for big price appreciation?
Absolutely, I think so. Yeah, because there will be a lot of people right now who, for various reasons, because they're not ready to, write down 12 words and self-custody their Bitcoin, they are looking for an easy way to buy it in their terminal, to buy it, to call up their financial guy and just, hey, get me some of this. It's going to be a lot easier. And I think as much as I want to drive the bottom-up adoption, and I believe that's really what matters the most longer term, this will drive a whole new round of interest. And then some of those people will then actually go and learn about, actually the ethos of Bitcoin rather than just sort of buying this ticker. And so I think what happens is, the yes and no here is that yes, let's say it's maybe not the best thing if BlackRock holds all the Bitcoins, but the no part of it is that there'll be people who start with that and then actually learn, wait a minute, I can actually hold and use this thing myself. I don't actually have to trust somebody else. I don't have to put all the trust into a third party. I can have a collaborative custody set up with someone like Swan, and where Swan can hold one key and the customer can hold two keys. So that's an example. But I think to your broader point about the ethos, does it corrupt Bitcoin? I think fundamentally, Bitcoin maximally challenges central banks first and foremost. I think the concept of a Bitcoin bank, to me, is not antithetical so long as you are able to self-custody and so long as there's many of those banks, theoretically, that you could use. And of course, that's one we're trying to help people self-custody. But I see it like there will be a lot of custodial users of Bitcoin. Now, again, I'm saying there's the world I want and there's the world that I think is likely. So the world I want is everybody to self-custody. The world I think is likely, there'll be a lot of custody. We are seeing more and more people who are learning the lessons of what happened with FTX, Celsius, BlockFi, and even in prior cycles like Mt. Gox and so on.
Yeah.
So the tooling has improved a lot and it is continually improving. So for example, multi-signature is a technology where you can have your keys distributed. It's not just one key, you can have 3 keys and in different locations. And so I think the popularization of multi-signature is going to come. And so in earlier years and in years gone by, it was more for the technical users and maybe people who were maybe at the custodian level, like big businesses would use multi-sig for their stuff. But now I think we are going to enter a new era where collaborative custody allows people to sort of be a hybrid, somewhere in the middle. They're not as self-sovereign or as private if they're doing it fully on their own, but it enables that next level of people. And I think what we've also seen is a lot more development in terms of easy mobile phone wallets even. So for smaller amounts, people can use a mobile phone and just get started in that way, right? It's literally writing down 12 words and you've got a Bitcoin address and you can receive coins there and that's your self-custodying. And then you can start with that and then next level from that is, to get a hardware device, or obviously if you're using a provider like Swan, then Swan can walk you through that and have support all around, built around this process.
So there's Stephan Livera and his prediction for Bitcoin. If one thing's clear, it's that the journey of Bitcoin is anything but predictable. Stephan's forecast of Bitcoin potentially soaring to $500,000 by the end of 2025, followed by an 80% crash, offers a fascinating perspective on the volatile yet exciting nature of cryptocurrency. Remember, such predictions are based on complex market analysis and historical trends, but the crypto market is renowned for its unpredictability. It's always wise to conduct your own research and consider diverse viewpoints before making investment decisions. Anyway guys, hope you all enjoyed today's video and that provided you with some value. I'll see you all in the next one, and as always, all the best.